With Vessel Futures Trading live at the Discord channel. Good morning to our community members. Today we're going to continue the talk on the Nasdaq contract, the NQ. We chose to go to even bigger picture today to understand the total trend. So today we're going to look on the week interval to understand better the trend. So we clearly see by the week it's an uptrend. We still do not change the record. We see how the graph is still going up, and over here landing on the major demand area and continue to climb up. We have to remember that when we're coming from a major areas, the price hits a major area is always going to try to achieve to get to the next major area. We're right here at this point. At the week, it looks like the buyer is very much strong in the picture. We're soon gonna go down to the day interval to understand a bit more where we can take a possible positions. So understanding that the price is basically trying to reach to the next major supply will allow us to take a better position within the day as well. So looking at the day interval, this is what we covered the last couple of days. I'm gonna quickly delete those indicators for us to better see this. So basically this is where we were the last couple of days. We were looking on those candles to make sure that even we are in a minus supply area, we still, of course, if you put a limit position you would short position it because you are in a supply area, of course 100 out of 100 times you would do the right move. Of course, that's under assumption that you put a limit order, but understanding the story and reading the map correctly and understanding that the price coming from a major supply to a major demand and already reached at one time, and at this point the sellers could not pull the price back to the demand. We'll see how the buyers are still very much strong in the picture. So if you are was in the market and you saw this thing happening, you would still not short position it. I mean, you had only two options, either to short position it or nothing. So most of the time, if you're not secure about what you do, you should not get into a position. You don't have to get a position every day and every moment. Of course, as less as you trade, more healthy for you, more healthy for your portfolio. You have to make sure that you manage your risk accordingly and properly. So what we have done in the last couple of days in this, when we saw those candles, we were long positioned for the specific reason, because we understand we're still coming from a major demand area and the likability for the price to go up is very high. Now let us see how does it look within the 4 hours interval. The 4 hours interval shows us a specific move that happened during the night. We're still sitting in the supply area, but we see how slowly and surely the price is going and trying to reach up and break this order block, this supply area right here, towards the major one up. So we will want to see the following pattern. I'm going to go in the 15 minutes interval for us to basically do a day trade, and we see how does it look, this move right here. I'm going to combine also two profiles. I'm going to look in the day and the night profile. So we clearly see that, well, let me try to extend that. We see over here the night profile. This is the night profile in the blue, and this is the day profile, the previous day profile in the reddish yellowish color. And we see how the price basically have been traded in the range of the night profile has been traded in the range of the previous day. Means that buyers and sellers are still did not specifically decided what is the fair price, and decided that this is the fair price right here. This is where the price basically been traded 70% of the time. And now, slowly but surely, the price started to climb up. It's going to be affected by the bigger interval. So if the bigger interval shows us is an uptrend, we will try to get a long position, a possible long position within the day. We see how the price basically have tipped over here. We see how the prices slowly start to accumulate in this area. We see by the night profile those cubes right here. We see obviously this 1, 2, 3, 4, 5, and 6 cubes are being pushed towards up from institutional buyer, and now we are starting slowly but surely to start to build a new profile over here. Let's remember it's just 9:06 right now. The day profile still did not inform. It's going to start in 9:30. So for us to take a long position, we have to understand better what we do. So if we already see that the trend is going up, and we understand that it was a major institutional buyer push the price up, we will most likely see the day profile started to build upwards from those profile, trying to achieve a break of the supply area and going up towards the major demand. So where is the opportunity lies? Obviously, we already launch a limit command right here, and we want to see the following in order for us to get to the position. We want to see the following: the price will hit back in the POC. Basically, if I'm gonna quickly cancel the profiles because I want you to see that. We see even within canceling the night profile and the day profile, we see what happens over here. Basically, we form a new demand area, 15 minutes interval demand area. So we want to see the price launch towards this pool and do the following move in order for it to get to a long position. First position could be this position. The price will launch back, draw back to take the rest of the comments over here in the 15 minutes demand area, and then bounce back up towards breaking the supply area. This first position that we put today. Of course, this is always, as a disclaimer, this is not substitution for financial advice. You should always consult your financial advisors. Those are just trending ideas, our trending ideas. And we see also the risk management over here. If I'm going to narrow it a bit down, make it close to the pool, we're only risking $2,270 in order to create $8,000 gain, which is very much possible. We already see how the institutional buyer pushed the price up. If we were early into this position, of course, we would take it. For now, we have just sit and wait to see how the price will behave and react accordingly. Second position can be a possible position that what we want to see in order for us to get to a long position, a longer position. Basically, we want to see the price launches up, breaks the supply area, lands back on the new demand that is going to create somewhere in this area over here. Basically, this is the top of this pool. We want to see the price lands on the top of the pool and then take another position upwards, a long position within the day. So those are two options that we gave today. For now, we're just going to sit and wait for the price to do the action that we see by accordingly reading the map. As always, I want to wish you a successful trading, and if you're not part of this group and if you're not part of this community, I highly recommend you tap into this community. Of course, you're going to meet other traders, you're going to be educate yourself. It's a free education, it's charge free. Highly recommend for you to join in and continue with the weekend special. The five first traders that gonna DM or comment on this video, Ben Teach Me, will get the essential course for free. 100% charge free. It's going to be a very good start or entry level for you if you're a new trader to get the better of the market. They get understanding what future contracts are. If you want to get yourself to for financial freedom, if you want to get more income, and if you choose to invest in yourself and in futures, cannot be a better time for you. First five during this weekend that gonna text, DM, or comment on this video, Ben Teach Me, will get the course for free. For meanwhile, I wish you happy trading, and I'm gonna see you on the next market overview.